Welcome back, ladies and gentlemen, boys and girls, slumdog traders of all ages. We are back with another video. This time we're going to be discussing the unknown stock called TLT. I say unknown because not that many people know about it. But before we do, make sure you're subscribed, hit that like button down below, hit that bell notification for future videos. And with that, let's jump right into it. So, what is TLT? Well, in short, TLT is basically just a stock that follows the 20-year Treasury bond. If you're unfamiliar with Treasury bonds, I highly suggest you Google it. I'm not even kidding. Treasury bonds are basically it's just a place to hold money that incurs interest. Think about like a certificate deposit account, a CD, savings account, but the only difference is that it's gaining more interest and it's held by governments or a whole bunch of different institutions. Now, this stock trades against the bonds themselves and also government bonds as well. And anytime that something happens with the stock market itself, like you see here, or if, let's say, I don't know, feds or the federal government decides to cut interest rates, TLT goes up. Market goes down, TLT goes up. Interest rates are cut, TLT goes up, and vice versa. Now, get you the Google terminology here, because I know a lot of you are going to be like, oh, that's not what it says in Google on a Reddit or anything. Oh, so in short, TLT is the NASDAQ symbol for iShares 20 plus year Treasury ETF, ranked as one of the best government long bonds by sources such as U.S. News, World, and World Report. TLT invests about 90% in the underlying index and 95% in U.S. government bonds. And as I stated before, if rates rise slowly enough, the extra yield can somewhat make up for the price decline. This is what TLT goes up. Where TLT really shines is during an equity crisis, where a flight to safe assets causes yields to fall quickly and TLT price to increase. This can help offset losses in equities. In other words, this is basically a safe haven for all of those elites, all of those high-end players, all those hedge fund managers. Anytime they see an issue with the market, they're like, psh, we got you. Say no more. We got this TLT on deck. You feel me? We're gonna save you behind. We're gonna save them stocks for you. And that's where they move to. And that is called what we call a rotation. Now, the last time this happened, as you saw on the chart, I don't know if you saw, you see that big dip? The purple is the market. This is what I use as an indicator for the market. It's called the SPY. It's another ETF. This was when I believe this was like March 9th, was it? March 23rd? This is when the market went to hell. The China trade war issue, and I think we were in the midst of the pandemic, and that's when everything was coming out, and everybody's like, oh my God, everything's crashing, blah, 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 blah. But as you can see, TLT is the green and red. When the market dropped and they actually cut interest rates on March 9th, this is when TLT was at its highest. It was $171.29. That never happens. Look at this. It's like 130 back in 2019. That's ridiculous. That's never happened before. And that's why the year 2020 has been ridiculous for the stock market. It's crazy. So there's a lot of opportunities that everyone can jump into. I'm getting ahead of myself. So when the market goes down, and interest rates are cut, this is when TLT goes up. When it's the opposite, that's when TLT goes down. So this is why I am waiting, even though I kind of have my hand in the cookie jar already. I am waiting to see if not only tomorrow's results from the bank stress test, which we'll get into a little bit later, but also to see if what's going to happen in the next 2 weeks. We've got so much negative news that the market is just eating up, thinking that everything is okay. Oh, the government has my back, blah, 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 blah. In my opinion, no. First off, no one will have your back. They were just looking out for themselves and making sure they're keeping everything afloat. If you keep the boat afloat, then everything stays good. But if you don't, if you just got your own personal raft, then, that's, yeah, 1%ers. But anyway, so this is where things is going to get tricky. If the coronavirus cases continue to go up, if civil unrest continues to continue, if what else? If the Fed or if the Congress doesn't pump the economy with any more stimulus, if there's a second wave of coronavirus that occurs, if we go back into another lockdown, there are so many negative probabilities that are likely to occur before the end of this year. We're only in June, y'all. It's about to be in July. We're halfway through the year and shit has not gotten any better. People think that there's like a facade going on. Like if you're going outside, I'm in the Eastern Hemisphere here, but if you're going outside, everybody's acting like there was no coronavirus. There is no pandemic. Meanwhile, down south and in the West Coast, everybody is just, again, they're probably doing the same exact thing, acting like there is no pandemic. And this is why there's such a large increase in cases. Now, according to Trump, he's reducing the amount of testing that's being done, which, don't get me started on that, but I'm not going to get political. But, as Fauci said, my man Fauci, we're still in the first wave of the coronavirus pandemic. This was June 17th. June 17th. We're still in the first wave. Now, if we're still in the first wave right now, what do you guys think is going to happen? The market is going to continue to go down. People are going to realize, well, oh shit, well, maybe things aren't the way they are. And they're going to start taking profits. Like at this level, they're going to start taking profits if they haven't done so already. Today was a horrible day. Today was a big sell-off day. We then went down to like 303, I believe, if I'm not mistaken. Yeah, we're at 303. And I guarantee you, by the end of this week, I guarantee we're going to be even lower. I guarantee it. Why? Because there's no positive news to push this up. Everybody keeps talking about that there's a new vaccine. Everybody keeps talking that there's a whole bunch of different therapeutics for maintaining this COVID. Like, that's all there is. And that's what I want everyone to actually kind of get or understand, is that the market is an emotional, fickle mistress. It is very emotional, and you need to basically be sitting on the sidelines or being something that's protected and just eating your popcorn, watching it happen, and then taking full advantage and once you see the opportunity and jump in. And that's all. This is all I really want to do with this video. I want to make sure that everyone is aware that there is opportunity here. With TLT, there's huge opportunity, and I want everybody to know about TLT, and I want everybody to jump into it. But I know that's not going to happen, and that's, again, not a recommendation, so don't do that. So, yeah. But let me get into a little bit more detail about TLT. A little bit more. Just a little bit more. Just so I can show you something. Now, remember when I said back in March 9th when the Fed cut interest rates? Yeah. This is the 20-year bond right here. It's pretty much TLT. They cut it to 0.87. As you can see before that, 1.89, 1.2, even 2 back in January. Ridiculous percentage of interest rates. Like, it's beautiful. This is when people started flocking, because when you have low interest rates in pretty much anything, or not anything, I would say with bonds, and the Fed controls that, you want to make sure you get as much as you can. If you get in for a low interest rate and then you get a they increase it, like to going back to this, that's a hell of a come up. That is a hell of a come up. So that is what I feel as though is going to happen again. And as you can see, there's a nice little pattern going on. You see on June 11th, this is when everything was still skeptical. This is when the market took a hit and everybody felt as though it's really not. They were like, maybe the market isn't really that bad. Maybe it is okay. And then Trump came out. And it was like, oh, everything's good. This is when we had, I believe, not the economic data, I think the jobs data, if I'm not mistaken. Yeah, that's when the jobs report, and there wasn't that many supposed unemployment claims or whatever. But either way, as you can see, the pattern continues. It's still, anytime you get a strike of good news, it's like, boop, like a little blip. And that's it. But the negative news drives it even more. So I'm going to continue following this downward pattern in interest rates. And if that's the case, TLT is going to go right back up to the same levels as it once was before. And that's what I'm hoping on. That's what I'm banking on, personally. So, but with that, let us now get into our lovely, lovely debit spreads and what they are. So, with TLT, as you guys already know, I know you're probably tired of hearing me here. That's something I'm going to be saying a lot. TLT. Get it into your head. Get it into your head, guys. No. Oh, so with TLT, I am actually playing it with debit spreads. And the reason why I'm playing it with debit spreads right now is because there's a lot of uncertainty. There's a lot of unknowns. This can easily drop with the market just going straight back up. And then next thing you know, interest rates go right back up and the market's back to square, or we're back to normal and everything's good. The pandemic never happened, everybody's happy. So in case that tinfoil, whatever you want to call it, aluminum foil crazy theory occurs, then I'm safe, because with a debit spread, you're not taking that much risk. Whereas if you're buying a regular contract or call, put, whatever, you're basically paying more for it. In other words, not rather paying more, but you're basically taking more of a risk, rather. That's what I want to say. You're taking more of a risk because it's not protected by anything. Whereas with a debit spread, it's protected by selling another contract at the same exact time. It's crazy, right? America. Haha, love it. So with a debit spread, when you can buy a contract. Let's say, for like in this case, I bought a $240 strike price for TLT, expiring January 2021, because I love the time, and then selling one that's at $255 with strike price. See that? And you see how there's a price difference between the two? So when the strike price is lower, then if you're buying a contract that has a lower strike price or closer to the money where the stock is, and selling one that's further away from the money, further strike price. And that's what a debit spread is. If I lost you, it's okay. I'm going to go over it one more time. So a debit spread, in short, is when you buy one contract that has a lower strike price than the contract that you are selling with a higher strike price. And you receive a credit for these. If they go into the money, if they hit 240 by this time, I doubt it, but if they do, buku. Don't know what the buku is because I can't really do the estimation, but regardless, if it goes down, I'm not losing as much. Granted, my rewards will probably be a little bit less, but it's the same thing goes for my risk. So it's basically it's what it's called. It's kind of like hedging. It's basically what it is. It's hedging. You're protecting yourself against anything that if this were to falter, if this were to fall, this will protect it. So you won't lose as much. So, but the more that you have, more the potential gains. So this one is really about quantity as opposed to quality in a play, if that makes sense. So for debit spreads, you would focus on quality, the amount that you have, versus if you had just bought like one contract or individual contracts by themselves, you would focus on quality or the type of contract. You would get more that are closer to the money, if that makes sense. And let's see. So in Robinhood, I'll show you real quick. This is how you trade one. Now, also remember too, I don't recommend it. None of this is a recommendation, as you heard in the beginning of the video. But if you do want to do debit spreads, make sure, because especially that everything that happened with that unfortunate, it's even hard for me to say because I lost somebody to unfortunate suicide not so long ago, but it's a long story. That young man that took his own life because he thought that he lost like $720,000, which is ridiculous. He didn't really lose that much. He was playing these spreads. The thing is that sometimes, especially on Robinhood, they go out of whack. Like I wake up in the morning sometimes and my debit spreads go up to like 55,000, 25,000. And it's because of the fact that these go to a penny. So it's not reflecting the actual price. It's like a glitch in the system. And then, but his case, he got assigned on a contract. He had a whole bunch of them. He had like 16K or something like that. And it expired in the money. So it showed that he had a negative balance, but his balance wasn't updated yet. And so had he had someone actually sit there and explain, or even had he gotten in contact with Robinhood, like we don't know the specifics of his situation, but if he just reached out to somebody, man, and just took the time to do the research, or even like watch one of my videos or something like that, he would still be here. I hate this. But anyway, on a more positive note, let me show you how to do a debit spread here. So we're going to, as you saw, I don't know if you saw when I was scrolling up and down, the plus 50s and minus 50s. This is literally what we're doing. We're going to buy, make sure that's highlighted, buy this one, and switch over to sell. And I'm selling this one. And it'll cost me 14 cents. That's actually not a bad spread. I might get that one. So and some of you are probably asking, like, why that specific range? Well, I want that wide range because, like, you see the pricing. I go by the pricing. If the pricings are if the prices of the contracts are the patterns of it, or actually the difference between them is high. Like, for example, this isn't that high, so I would go further. Then that's the one that you want to be in. That's the one that I would like to be in, because it gives you an open range of possibilities for the contract to actually increase. Because let's say if this gets closer to 210, like this one would be a good one too. Let's see if I can cancel this. Oh, don't want the ratio. Don't mess with the ratios. That's another thing. Do not mess with the ratios. Please. Thank you. Okay. So we're buying one, selling another. So this is at 225. You see that's 39 cents. I pay 42 for that one. This one's the same price. This one's 29. Now some of you are like, well, why don't you pay this one at the same price? It's not going to let you because it's 0. And that's a glitch in the matrix. It hasn't updated yet. It's probably a lot lower than that. But this one would be a good one. It's 13 cents. Now, if you go further in, you're paying a lot more the wider you're making that price. So you don't want to make that gap too big, because if you do, you can lose a lot. You can lose a lot, and not even lose a lot. You probably won't even gain that much, because one contract will basically compensate for the other. So you really wouldn't be gaining that much. It would be pointless to do a debit spread in that case. You would be better off just buying the contract outright. All right. So that was the basic summary of what a debit spread is, and as the reason why I am going to be playing TLT for the next couple of months. Also, that's another thing I wanted to point out too. Anytime that you're doing a debit spread, especially on TLT, because TLT is a slow mover, make sure you get a lot of time. As you saw, I was in November, December, and January. I plan on getting some probably more January 2021s. And probably going to be looking at 2022s as well, if the price is right. The reason being is because there's so much uncertainty with the market. I want to be prepared. And I'm also going to be looking for another entry point to get into TLT, but with just regular calls as opposed to debit spreads. And these will just basically be my backup, and the calls will be my primary. But that is what I'm going to do. I hope you learned something from this video. Hope you learned something about TLT. If you haven't, and if you have not taken anything from this or learned anything today, then you actually did. You learned that you will not learn anything by watching these videos. But with that, ladies and gentlemen, thank you so much for watching. Thank you so much for staying tuned. Many blessings. Peace out.